See, it's not even enough bandwidth to go live on StreamYard right now. It's just spinning. It won't even let me go live, guys. No.
Can you do it from your laptop?
Let me just try to hit the
laptop's not going to change. My laptop's faster. The Wi-Fi is faster.
All right, looks like it's working now. I hope. Can somebody verify this is working? All right, everybody, it's another week, another WTF, what the F. And again, I will be solo as Mr. Snaggy is in the air on his way up here for executive meetings that we've got the rest of this week. So with that being said, you got me. And well, here's what we're going to cover. There's a lot of stuff. What is 2025 going to look like? How are the markets going to perform in 2025? This is a question I keep getting, and I've got answers. You know, just the other day, somebody asked me, so what are your predictions for 2025? And you know what I said to them? This would be like the first time in years I haven't been able to give you a pretty accurate picture of what's about to unfold. And I said, I don't know. There is so much uncertainty, so much unknown going on in the markets that I truly can't tell you what's going to happen. But what I can do is give you the signals. And one of the biggest signals is what we're going to go over today, which are the indicators, the bullish or bearish indicators in the market. And there's a telltale 3-point indicator that we can look at. One you all may know of or heard of, the Santa Claus rally. Well, Santa Claus missed the mark, and we did not have a Santa Claus rally. And I'm going to talk about the other two, but not only that, I'm going to talk about the 3 things we need to be looking at in 2025, the 3 headwinds we've got that are going to really determine, are you going to make a bunch of money in the markets, or are you going to lose? And that's what we're going to cover today on What the F Happened. And there's a lot more, like Canada, what's going on up there, and should they be the 21st state of the United States of America? With that, we'll be right back after this. All right, we're back at it another week, another WTF coming at you. I know some of you love this show. Some of you might be brand new to this show. So let me just kind of tell you a little bit about what this show's all about. I mean, the name should say it all. What the F? That's the name of the show. So what we do is we rant, we rave, and we will argue about what's in the news. But what we've done a little bit, since nobody really believes the news anymore, me being one of them, we have literally subscribed to a number of economic newsletters and white papers. And a lot of the data for this show comes from them, because you know what? You all deserve the truth, or at least a fair shot or a fair opinion of what the truth is. Because the news, well, at least as of today, the news just doesn't seem to report the truth. Now, that is changing. And Mark Zuckerberg came on and said, censorship, well, we're not going to do it anymore. So he literally admitted that during the last administration, or the last couple administrations, they have censored. And now, well, he's saying they're not going to. We're going to cover that as well. But let's dive right in. The 3 indicators for a bullish 2025. So if any of you know what these indicators are, definitely put them in the comments. Make sure if you like this show, or you think somebody else would benefit from this, you tell them about it, send them the link, tell them to subscribe to my YouTube, because we stream on YouTube, on Facebook, on Instagram, and we're still adding. As StreamYard allows us to add channels, we're adding more and more channels, but the best one is my YouTube channel at the Chris Naugle. So make sure you subscribe to that. But you got to click the little bell up top, because that's what's going to notify you every time we go live. With that being said, let's dive in. What are the 3 indicators for a bullish 2025 or not? Well, one of them I already mentioned, okay, and that is the Santa Claus rally. So I want to kind of give you guys some context around this. So I've got this article here. The Santa Claus rally occurs in the last 5 trading days of the year through the first 2 of the new year. So this is come and gone. You all lived through this. And I know Many of you were kind of dealing with New Year's and holidays, so you probably missed this, but I didn't. So I want to kind of tell you the chart as when we closed out the Santa Claus rally, which would be January 3rd, the indicator, drum roll please, was down, which basically suggests that 2025 is going to be a down year for the markets. But wait, there's more. You see, there's 3 indicators. So it is not conclusive enough just to say that Santa Claus missed the rally, that the markets are going to be down for 2025. So let's go over the other 2. The second one is called the January effect, and it is for the first 5 trading days of the year, which conveniently today marks the 5th day. The 8th is the 5th trading day after the Santa Claus rally. So at the close of January 8th, which is today, this indicator will tell the second conclusive reason whether or not the markets are going to be up or down. And I want to report this live right now because as the markets opened up, I'm going to come over here. Right now, we're teetering positive negative zone for the futures. Now, we're still in the futures, but I want you to focus on the S&P 500 today. Right now, it is sitting at 59.54. 59.54. Remember that, okay? So today, if this indicator closes below December 31st's number, okay, which was 58.81. So we're at 50, it just popped off, but we're at 59 and change. And December 31st, it closed at 58.81. If we close today below 5881 on the S&P 500, the second indicator is locked and loaded, which now you got 2 of the 3 indicators pointing to 2025 being a down year. Now, the third and final is the entire month of January, okay? This is a really kind of loose one, but that's why it's the third one. If the month of January, if the indicator requires that as of January 31st, if we close below December 31st number, which is 58.81, well, that will suggest a down 2025. So basically what you've got to look at is, is it 1 or 2 or 3, that we're targeting. And if we get 2, that is very conclusive that we will see a down market in 2025. Now, I've been talking about this for a while. I've been studying a lot of reports, been studying a lot of indicators like the inverted yield curve, the uninversion of the yield curve, been following unemployment numbers, which are ticking up, been following economic numbers, GDP, all sorts of things, the short-term debt cycle, the long-term debt cycle, the technology cycle. I mean, I could bore you for days with the stuff that I study and I read and the things that I'm looking at. All of them point to the market going down, but you can never time the market. So that's the difficult thing. And because we're coming off the longest bull run in history, which literally there are many of you watching this right now, which you don't even know what a down market or a recession looks like. 2020 and 2021 was kind of just a boop, boop. It's not really a conclusive period of time that we can say, hey, we were in a recession. Matter of fact, they changed the rules for recessions back then so that they didn't have to call it a recession. So we'll just skip over that. So last recession, the last one that we really would have to kind of look at to know what it looks like and what it feels like is 2008. So how many of you actually felt the burden of the 2008 Great Recession? Maybe it's 50% of you, maybe it's 60% of you, but I'll bet you there's a lot of you on here that were too young. So if you're a millennial, you were too young during that period. You didn't know the impact. Maybe you saw your parents struggle a little bit, but you didn't personally feel the impacts. And that's really where the problem lies right now. There are so many people out there that literally don't think the markets can go down 50%, 60%, 70%. But I can show you on the charts. I certainly could do that. And we do that on the wealth webinars. We could show you like it is absolutely not just possible, but probable that the markets will fall 50+% because of the crazy bubble that we are in. Mark Paulson just came on, and if you don't know him, Google him. He came on CNBC, and he said, we are shaping up for the biggest, basically, he said reset or correction that we've seen in decades. He literally just came on and said that. But anyway, I don't want to kind of make this all doom and gloom, but it's really important that you all understand, like, listen, where we're at right now is at the all-time highs. And I'm gonna pull up another article and I'm gonna show that. So as we've got people piling in here, make sure you put the questions in. I'll be coming over and checking the questions out on Instagram. Looks like nobody's got any questions here. Hey, do we have any Canadians on today? Any Canadians? If you're from Canada, or if you're our northern neighbors, why don't you just put Canada in the comments, because I kind of want to cover that in a little bit, but I'll give you guys some time. And let me come over here. Oh, markets are now negative. Okay, so we are closing in on that 58.81 right now. So the Dow future, or sorry, S&P futures are now down a little bit. So we are at 59.44. Remember, if we close today below 58.81 on the S&P 500, we have two conclusive indicators pointing the markets are going to be down. So with that being said, let me come over here. I got a really cool article, and I just want to show this. This article, it's actually a newsletter. Says 3 new threats for America in 2025. And what I'm going to do is I'm actually going to share my screen, and I want to kind of just go through these 3 threats with you. And then we're going to hit some basic news stuff that everybody can look at. So right here, the market melt up. So this is pointing out exactly what we were just talking about. Markets are at all-time highs based on every available metric, from PE ratios, which is price to earning, cap ratio, market cap, GDP ratio, concentration risk, etc. Every single metric says the markets are at all-time highs. So on top of that, what he's going on and saying is investor complacency. Sounds like a bad word, right? Complacency. But that's what I was mentioning. Like, people don't truly believe the markets can go down. But not only that, the euphoria, the FOMO. I talk about this all the time. The FOMO of people being excited of it's going to the moon. Look at what just happened with Bitcoin. I'm not picking on Bitcoin. I think anybody that invests in Bitcoin or has been dollar cost averaging into Bitcoin stands to make a lot of money if and only if they can hold it. Now, that's going to be the thing, because euphoria works both ways. It works when the markets are going up. You get that euphoric feeling of, oh my God, I'm going to miss out. I got to buy in. I got to get some Bitcoin. And a lot of people did. They bought at all-time highs. And what happened to Bitcoin? It followed the market down because they're correlated. They are connected. They are literally trading in the same wavelength. They're correlated asset classes, which I don't know why, but they are. And it's really coming down to human emotion, the euphoria, the FOMO, but also the fear is the same. It works the same direct way. The euphoria of the markets going up is the same as the fear of the markets going down. So when the markets go down, people sell. And that is how they lose money. Remember, Warren Buffett said the best way to make money in the markets: buy low, sell high, and don't lose money. But you can't lose money if you buy low and you sell high. What are people doing? Well, they're allowing euphoria. They're allowing emotions. My TEDx talk that I did, the letter to my daughter, called Rethink Money, talks all about this. People do the exact opposite of what they're supposed to do when it comes to investing, because they invest with emotions, not logic. If you use pure logic and you follow the things that I'm talking about and many others are talking about, but you're here, so I'm just saying you're following what I'm talking about, it's logical. It makes full logical sense that we are at an all-time high and that we are more than likely moving downward. And that's kind of what he's talking about here. So right here, this is an important thing to pay attention to. When such conditions have existed in the past, they have always, keyword right here, always been followed by market crashes of 50 to 90% unfolding over several years. So just look at that. Always. Not sometimes, not, well, a couple times, always been followed by market crashes of 50 to 90%. So what does that basically say? Get ready, get positioned. Like I've been talking about treasury bonds for the longest freaking time. And most people that have followed me and listened, like, some people are mad at me right now. They're like sitting there saying, hey, Chris, why are treasury bonds going down when the Fed is dropping rates? Well, that's easy. That's easy. It's because you're just not being patient. Believe me, when we see a trend reversal, when we see the markets going down, right now we're just ping-ponging. It's up one day, down the next, up. But, well, it's starting to change a little. We're starting to develop more of a trend down, okay, since Christmas or since before Christmas, but it's still not there. So what is the reason why treasury bonds, long-term treasury bonds, have not gone up in price and actually have gone down, is because of perceived, well, number one, there's a lot of confusion in the market. There's a lot of uncertainty in the market, which uncertainty leads to, basically fear. Uncertainty equals fear and volatility. And because of that, treasury yields have gone up. Okay. And yields have gone up because they have to pay a higher yield to attract new investors to buy these bonds because of the uncertainty. We don't know when and what's about to happen. New president coming in, lots of changes, existing president, Biden doing all sorts of shit right now, wacky stuff like pardons and launching missiles into Russia and all sorts of contracts that they are signing, trying to literally make it so that when Trump enters, as president, January 20th, he's got just hell, like he's just got a lot of problems to deal with. They are literally the money that they printed during the pandemic. Sorry, I'm still not better. During the pandemic has not all been spent. So what they're trying to do is lock that money up in contracts for 3 to 5 years because they can't spend it all fast enough. So that's what the Biden administration is doing, which will then kind of stranglehold the Trump administration as they come in because they can't just undo those. Let me ask you all a question. And then we're going to come back to this. So let me transition real quick. How many of you read all that about Trump wanting to rename the Gulf of Mexico? How many of you saw that? I know it was kind of in and out of the news. Now, here's one of the ideas or the thoughts. Now, if you were following, Biden just signed a bunch of stuff, basically kind of making it so they can't do any new exploration or drilling in the Gulf of Mexico. So that kind of locks it up and strangleholds the Trump administration. I'm not sure if Trump can just go in and veto that, but let's just assume that he can't. So what would be the logical thing to do? Well, if we just rename the Gulf of Mexico to something else, well, then that would kind of void the contract that Biden just signed, would it not? I don't know this to be fact, folks. This is just my opinion, but makes logical sense, doesn't it? So there's a lot of stuff like that going on. It's kind of weird when you really look at why these things are happening. But let's get back into this article because I think it's just important that we keep going. So right here is what this economist, which his name's Jim Rickards, is saying, and he's written many books. You should read his books. Position for a historic crash. Specific cause doesn't matter. Could it be a war like World War III or any other war? A natural disaster. Hey, anyone see the wildfires going on in California? Pretty severe. 50 to 80 mile an hour gusts. Anyone ever see how wind affects flames and fires? Yeah, it's like dumping gasoline on it. And that's what's going on in California. It's really sad. We'll hit that briefly today, but that same thing is going on right now in the markets. You got some heavy winds blowing, the flame, if you will, across it. So natural disasters, bank or hedge fund collapses, just any unexpected event could be the trigger of the domino effect. Now, we haven't got there, but it's still a bit early. Hey, and Trump hasn't taken office. You watch. Here's my prediction. I'll give you my only one that I really can conclusively come up with is when Trump comes in, they're literally going to pull the rug out from underneath them, and not proverbially pull the rug out, but they're going to pull the rug out. The markets are going to just unwind so that, and basically kind of the thought there would be, well, then, everybody's going to point blame at Trump and his tariffs and everything else he's doing, which I've said it too many times. The tariffs will be inflationary. The tariffs will create a fallout in the markets because they will not be viewed in the near term as positive. They will increase prices, but in the long run, they will be positive. Just look back to anywhere else in history where tariffs have been used to the extent that Trump plans to use them. And in the beginning, it creates pain, and then it creates a really good economic future. So got to go through the pain. The obstacle is the way in that. Right here, number 2, a U.S. recession is coming. Okay, there are ample signs, which I've mentioned many of them, that the economy is headed to a recession. Number 1, the uninversion of the yield curve is a telltale sign that has never been wrong. When it uninverts from an inverted yield curve, which we were long in the inverted yield curve, which I covered too many times, and then we uninverted, which basically means a recession is imminent, which is basically one of the ample signs he's referring to. And I'll just hit him right here. Okay, so he's including higher unemployment. So if you're following unemployment, which was in the news today, yes, unemployment numbers are going up. Lower interest rates. Are we seeing interest rates go down? Yeah. Are some people saying that that's good? Yep. And are other people in the know that that is not good? And I've covered that. It is not good. That means that the Fed sees a recession and they are trying to get ahead of it. You can call it whatever you want. Flattening yield curves. I already mentioned that. Negative swap spreads. Collateral shortages in the euro dollar. Like look at the US dollar. It's at like, I don't know if it's at all-time highs, but it's soaring, which basically is making it more expensive for foreign nations to buy our goods and services because our dollar's worth so much. So what they're doing is they're rushing and switching money into the US dollar, which is all part of the plan. Okay, so right there, China's reserve positions, not a sign of dumping treasuries, a sign of the dollar shortages and need to provide liquidity to banks. All right, let's keep going. Here, let's just hit this one. The emerging recession will cause stock market drawdown as earnings are revised downward, which we've been seeing. Consumer confidence crumbles. We haven't really seen that yet, but we might see that soon. Consumer discretionary spending hits a wall and precautionary savings rise. We definitely haven't seen that. People are still spending like crazy people. And the world will not bail out the U.S. economy because China, Japan, and Germany, and the UK are all slowing economically at the same time. The world is connected until it's not. If you read and I say this every single time, but The End of the World is just the beginning. I just finished reading that for the second time. Or actually, I'm reading the epilogue twice, but it's kind of a sum up of the whole thing. He's basically kind of predicting in that book, which was written in 2020, everything that you're hearing right here. But the U.S. will be the best place to be. However, you've got an economic slowing worldwide. We are still doing better off than most other countries. Like, look at Europe. Poor Europe is a freaking mess right now. And I'm going to come over to your questions in just one sec. I just want to cover this last one. And then currency wars. Currency wars are back. Okay. So what I was basically just saying is the tariff. So in anticipation of the tariffs that Trump's going to put in place, what that's doing is it's driving the US dollar up. And it's also forcing investors to seek dollars to jump the tariff walls. So the results of the global contraction in trade that would resemble the trade collapse in 1930. So he's paralleling the 1930s, the Great Depression, with what's happening right now when it comes to these trade wars or this trade collapse. And U.S. stocks fell 85% from October 29 to June 1932. So remember, the economy goes one way, he says. He says business cycles have not been erased. The transition from Biden to Trump will bring economic pain, and Trump inherits Joe Biden's mess. The U.S. economy, in contrast to the economists, does not pay that much attention to elections or new administrations. It's too big and moves on its own complex tempos. Investors may cheer the Trump policies, hence that euphoria that we talked about, that FOMO. Everybody's like, Trump's coming in, everything's going to be okay. Hold on a second. The markets don't really look at that. So that's just investors. But it's going to be a very bumpy ride the first year, or I would say 2 years of the Trump administration. So let me stop sharing that. Let me come over here to some questions we've got here. So we got Instagram. I'm going to start with you. We've got TYREX Inc. Okay, that's saying with low interest rates, tech and with AI are still, still have a lot of demand. Are you referencing recession in certain sectors such as housing? Listen, this is a good question. A lot of people have this misconception that if we go into a recession, it's going to be a sectorized recession. Go back in history and find me one other time. Just find me one other recessionary period where it has been sector related. Like, please find one. So you have to understand that a recession is kind of like the ocean. When the tide goes out, all boats go out. And when the tide comes in, all boats rise with the tide and they all go out with the tide. The market's worth the same. Doesn't matter how strong a sector is, like AI. Listen, I don't think you'd find anybody that would disagree that AI is going to be the wave of the future, and quantum computing, which if you followed NVIDIA's releases and some of the other things, which we're going to cover in a second, you'll understand a little bit about quantum computing, which is kind of, well, it's a fucking big deal. But AI is also a big deal. But right now we are struggling with AI. It's like the AI battles. Oh, and by the way, everybody, this is Lazy Cash. He is a staple on this show, never, ever misses making an appearance and getting comfortable while we do the show. So anyone that doesn't know Lazy Cash, that is our shop cat. He lives here at the offices and keeps things under control, make sure that we don't have any mice. And I'm just kidding. But back to that, you will not see a sectorized recession. I know those areas, a lot of people believe, oh, Bitcoin will be the safe haven during the recession. Wrong. Bitcoin will certainly fall and fall severely into a recessionary period. AI or any of the companies with AI like NVIDIA or any of the other ones, Microsoft, any of the Magnificent Sevens will all fall into a recession because, hey, that's just the way it works. But it is a very good question. And again, it points out that, what we have to do is understand history and how all sectors have performed during recessionary periods in the past to determine what's going to happen in the future. Now, some would say, oh, it's different now. No, it's not. It's no different than it was during the dot-com. It's no different than it was during the Great Recession. It's no different than it was during the Great Depression. Sure, different companies, different industries, different, things are hot, computing and technology is the new wave of the future. AI is the wave of the future. Love it or hate it. Like, everybody's scrambling to find ways to have AI solve problems for them and also find ways to not have AI literally take over the world. And then we're looking down the barrel of Terminator. What would we be on? Terminator 10, Terminator 11. Anyway, all I remember is Terminator 1, 2, and 3. But anyway, that's kind of my answer to that. So you can kind of look at it any different way you want. But when the markets go, all stocks will go. There will be some that will be more defensive. There will be some that will be more recession proof, like consumer staples or what is that company's name? I don't know why I can't think of it, but any company that is heavy in foods, it'll come to me. I'm just Philip Morris. Philip Morris has always proven to be a pretty defensive company. If you think we're going to end up in World War III, you could look at defense stocks, but again, that's a more speculative play. Some of you might look at oil because obviously Trump is very pro oil, but as we pump more oil, as we're kind of become more oil independent, remember that will bring the price of oil down, which would not be good for oil investments. But in the grand scheme of things, in the next year, I think oil will be a good play. So these are just some of the things to consider. So 365 King said, how hard would it be to insure my father? He's 58 years old. So he's probably referring to the infinite banking concepts that we talk about all the time and the specially designed and engineered whole life policies that we build to basically fulfill those private banking systems that we set up. 58 years old is I would say young. Okay. So if your father is 58 and in good health, no problem whatsoever. Giddy up and go. Let's book a call and get that set up. All right, let's see. Somebody said article, not sure what that means. That was a Jim Rickards article we were looking at a second ago and lots more. Family Latin Bank is our Latino friends kind of holding down the infinite banking sector for anyone speaking Spanish and the Latino community. So great job over there. Where's the information, Chris? This notice you read. So so that article that I was reading, and I'm going to read a couple more before we're done with today's show. That article comes from an economic newsletter that I paid to subscribe to. Jim Rickards is the economist behind that. And then I subscribe to a whole bunch of other ones. But that was Jim Rickards. And he calls that one strategic intelligence. So you can Google Jim Rickards or Paradigm, okay, which is the name of his company. And that is the strategic intelligence article that we just went over there. All right, so let's see. What other questions do we have here? First time I see Lazy Cash. Yeah, he's here all the time, but sometimes he pops in and pops out. Let's see. Chris the Legend, thank you so much. I doubt I'm a legend, but appreciate that. Chevron is a very nice stock for stock in the future. I think any oil for at least the near future. I don't want to get too bullish or too speculative, but for the near future, I think you're right. I think any of the big oil companies, would be probably a pretty fair bet. But just know when the markets go down and we enter recession territory, everything will go down, including oil companies, for sure. Oil companies. All right, let me come down here. We got some good questions coming over here on YouTube. Let's see here. Chris Bizub said, let's see. If this is what the market and the economy is looking like this year, what would you stay away from in real estate? What's not smart to be in? I get this question a lot. Real estate. Oh, Chris, how do I answer this? What would you stay away from? Well, think of it this way. When you enter a recessionary period, a downward pushing economy, people have less money. unemployment goes up. So people get laid off. People have, no money. Well, they have unemployment, but their incomes are drastically cut. So if their incomes are cut, what are they not going to do? Well, they're not going to travel. They're probably not going to go and rent Airbnbs. They're going to look for the cheapest hotels if they have to travel for their kids' stuff. So I think Airbnbs, we've already seen a lot of compression in Airbnbs, and I know that's your space. We've seen a lot of compression in pricing on Airbnbs. It's gotten very specialized, I guess is the word I'm maybe looking for, or location matters, and seasonal rentals really matter. I think let me not just kind of say the things to be aware of. I would be, here, let me just hit a few more. I would be very, very aware or concerned about big flips that people are buying now to flip into the future. So let's just say that you've got a project that's going to be 6 months out. I'd be very concerned with that. I'd be very concerned investing in home building, okay, or just buying homes or building homes to resell. I would be very bullish on build to rents. So they're going to get hit in the interim. Okay, it'll be hard for them in the interim, just from a cash flow standpoint. You're already seeing that. Actually, we're already in that. So developers that are developing workforce housing or rental, build to rent type developments, they're having trouble right now just from a cash flow standpoint. Banks are really putting the kibosh on them. So those developers they got to get ahead of the bank problems. So I would be very concerned in the near term with all real estate, but in the long term, I would definitely be very concerned with flipping. If it's not short-term, easy flips, I'd be very concerned with buying Airbnbs, thinking you're going to get the same kind of rents you were in the last prior couple of years. Rentals, I think in the interim, you're going to see lots of people not paying rent. I'm already starting to see that. I've got I just finished one foreclosure, which took me 6 months to get the dumb bitch out of my place. And I mean that, holy, she just a scumbag. But the second one is somebody that's been renting from me for a better part of a decade. Just stopped paying rent. Just out of nowhere, just decided wasn't going to pay rent. But it's always been kind of a problematic tenant because always just thinks his problems are the world's problems. So I don't know. That's a long-winded answer, Chris. Sorry I meant so deep in it. I just don't know how to really pinpoint to tell you what to be concerned of. All real estate's definitely going to get tricky. And I'm not saying there's not opportunity in real estate, because it doesn't matter what economic cycle you're in. There's always money to be made in every industry. You just got to be on the right side of it, and you got to be very cautious about when and how you're getting in it. Let's see, what else we got. North Song said Trump should proclaim an annulment of Biden's actions due to illegal actions of his signatures being done with a person that has dementia. Listen, kudos to that. I mean, all the signs are there that the dude's got dementia. He probably doesn't even know what he's signing, but we all know he's not pulling the strings over there anyway. He's not in charge. He hasn't been in charge. He never was in charge. I mean, barely can get out of bed, barely can walk up or downstairs, barely can mumble a sentence. In the one times that you do see Biden actually mumbling, or not mumbling, getting a whole speech out, I think it's all safe to say, it's probably not Biden. It's probably somebody else that they've dressed up because they can make people look just like Biden doing the speech. But hey, that's all conspiracy theory shit, and I don't know what I'm talking about. And you should all just know that is just my opinion. Let's see. Everything pulls back in recessions. Correct, A1. Everything, to repeat that again, pulls back when we go into an economic slowdown and then enter a recessionary period. John Fisher, how about just property, no buildings? Listen, they're not making any more land. I think this is the beauty about real estate. There's only so much land. So if you're buying land and you're just sitting on it, I don't think you're ever going to do bad with that. I own land. We own land right down the road here. It's not just land. It's got buildings, but we're going to tear them down. I own land right next to where I grew up. I own not a lot of land, but I own land, and I've never not made money on land. But the problem with land is it's not cash producing. Okay. It does come with an expense because you got property taxes, you got maintenance. Even on raw land, you still have some maintenance, not much, but some. So there's going to come an expense with that, and you got to play it long. I think here's the biggest sum up of all these questions on real estate. Anything you're going to buy or invest in real estate, as long as you've got a long-term outlook, 5+ years, you're probably good. Okay. But you're going to go through a lot of pain during those 5 years. You're going to have lots of capitulation in your pricing. which means your pricing is going to definitely go down. Your house is not going to be worth what it was when you bought it. Listen, I think we all can argue that. Like right now, I just bought a place up on the hill, bought it last June, and we Airbnb it. And then we also enjoy it and use it, which we haven't yet just because timing hasn't allowed, but nonetheless, we plan to. And I will tell you right now, in the next year, I expect the price of that property to go down. It'll be worth less than what I paid for it. And I think any of you that are investing in real estate, that's what you can expect. Your price will be lower than what you paid for it in most cases. But if you're cash flowing it, that could be okay. You're going to have some pullback and some rent suppression, okay, because people are going to stop paying rent. You're going to have some vacancies go up. So your vacancy rate, when you're doing your pro formas, increase your vacancy rate. Account for more vacancy, account for longer vacancy. If you live in New York, you're just fucked like me, because it takes literally, I was just on the phone yesterday with the attorney, 6 months. Imagine this. You've got a tenant who stops paying. You got a scumbag tenant. Just imagine this. The earliest you could ever get them out of your house, the earliest going through the legal channels, is 6 months. 6 months. The courts say if the client or the tenant has been there, I think longer than a year or longer than 6 months, one of those two, they have 90 days to make up on the rent. 90 days before you can even evict them. 90 days. So when somebody stops paying your rent, there's a strong probability they're going to stop paying your rent. They're not going to continue to pay your rent. So if they're already 2 months behind in rent, and then you start the process, like the demand letters, they have 90 days. So do the math. So now you're 2 months behind in rent. Okay, so now you're going to add another 90 days to that. That's just now if they don't pay you during that 90 days. And when do they pay you? The 89th day. And then they repeat the cycle again and again, the smart ones. But let's just say they don't. Then you begin the eviction process. And that's going to be another 3 months. Welcome to New York. And California is probably no better than that. So anyway, that's basically what you can expect. Steve McCarthy says, do you think the economy will be in the Trump effect recession? If any, will rebound quick, crazy times? Now, that's another great question. So Steve McCarthy saying, hey, listen, if we go into a recession, do you think the Trump effect will pull us out of that recession earlier? Yes, I do. So if we did enter a recession, which I would probably argue that the recession wouldn't really kick in until late 25, early 26. But again, it will be very turbulent, and I could be late on that, but I'm just trying to speculate here. And do I think that it will rebound quicker? Yes, I do. But I think you can just in your mind, just think 2 years. If you look back to Reagan, and you look back to the Reagan administration, which is probably the closest one to compare to what we're kind of looking at now, you got a 2-year period of turbulence. And if you're okay with that, then great. But most people say they're okay with that, but then all of a sudden when they lose 40% in their 401k, they're not okay with that. So, you got to pick your side. Either you're going to get out of the market now, and I can't understand why a lot of people don't get out of the market and take their gains off the table, because you still, right now, as of today, you're still being paid pretty decently to sit on the sidelines. I mean, come on, you can go out and get high yield savings. I'm seeing CD rates still in the mid 4s. You can get fixed annuity rates, mid 4s. Dude, we're getting great returns, in whole life policies. You can get into money markets in the mid 4s. So like to make mid 4s with zero risk, with insurance, like FDIC or SIPC, like why would you take the risk? Why wouldn't you take your gains off the table? Like, unless you're just mind warped, or you've got a bad financial advisor who's feeding you full of shit. Oh, the markets are going to go up. Markets aren't going to go down. Don't listen to that Chris guy. We've got to be in it for the long haul. That dude's just trying to continue making his fees. Like, let's be real about this. Anyway, that's what you got to look at. So whether or not it's going to be a rebound quicker or not, you're 2 years, man, 2 years. Let's see. Steve McCarthy said, give them money to leave. I did, and I recouped it back. Yeah, and listen, I would love to give him money and just say, hey, get your fucking shit out of my place and get out of here. I'll give you $1,000 right now. He wouldn't leave. He wouldn't. So some will, some, that's how I got people out of my places. Or I didn't even get people out of my places in COVID, because you couldn't evict people during COVID. What I did is I paid shitty tenants $500 to allow me to show the property over the weekend. And then I put it into the contract that, hey, the tenant comes along with it. You can't come back on me because of that. And that's how I sold all the properties. And now I'm just the bank. I I preach what I teach, and I am literally just the bank. I lend money today. I don't have any desire to buy real estate with any other capacity of I would invest in real estate. I would take ownership as a limited partner or as a just a joint partner for the tax benefits, for the depreciation, the cost segs, and things like that. And then I would basically just not want to ever operate or deal with any of this shit. I'll just take the tax benefits while we're doing it. And then someday when it sells, whenever that happens to be, I make the money on it. So that's how I'm looking at investing now. I don't want to be an operator. I don't want to deal with tenants. I don't want to deal with freaking realtors. I don't want to deal with home inspectors. I don't want to deal with building inspectors. I can't stand any of it. And if any of you are in real estate, what I just said, you're probably, your hair on your arms, if probably just stood up. And if you got hair on your back, I'm sure your hair would stand up. You're like, yep, hate all of those. Anyway, let's come up here to Instagram. Let's see. And then I want to move on. I know I went deep into that. So thanks for the questions. They were great, but let's keep moving on here. I've got another one here. This is another economic newsletter called The Rude Awakening. It says Trump's first crisis. All right. So what this is going into when it's talking about it is it's essentially saying there's the shortage. They're referring to try to explain this. It's kind of like Elon Musk saying it's very predictable. In the first year of Donald Trump's presidency, he predicts America will face potentially devastating shortage. The shortage could send tech stocks spiraling. You're already seeing that. And I'm going to cover that in just a second. It bring inflation roaring back and dramatically increase Americans' and energy bills. So Trump said we have to produce massive, but he said, but will we be able to do this? So this is just another one where it's just talking about the entire situation. And, I don't really want to get too deep into this. It's a long article. I probably shouldn't have even opened the door on that one. So we're going to move past that. How about Canada? Trudeau. He's gone. He met with Trump. Trump was like, hey, you should just become the 51st state of the United States. And Trudeau said, all right, peace, later, I'm out. Now, this is interesting. I want to show you this. Does anyone, we probably don't follow Canada too much, but has anyone looked at the mess that this dude made in Canada? Like one person, Trudeau, like if you go through this whole article, it talks about the different things that he did, ethics and scandals, controversies. Just talking like Trudeau's decision to award WE Charity a $900 million contract to manage a student grant program. Let's see, growing economic burden. So Canada's a fucking mess financially. And lots of that was stemmed because of the decisions he made. Right here, you're falling short on Indigenous reconciliation, the rocky foreign policy that he has, his pandemic response. Any of you that have, I'm very close to Canada and I've got a lot of friends in Canada. Like how he responded to COVID was just a joke. It was literally awful. It was just awful. He missed energy and environmental targets. I mean, so basically the Prime Minister of Canada is gone, but it was a complete disaster, leaving a massive mess in Canada. So I think one of the things to look at is could if this new, more conservative Prime Minister comes in and does take power, could that fix the problems going on over there? But anyway, I want to pivot over here to a different article. And some of you probably have seen this, but I kind of read a bunch of articles prior. I didn't cover it on here because we only do this show once a week and things are happening pretty quick. But anyone been following NVIDIA? Okay, right here. So NVIDIA recently just had a big press release that they did. And it basically, what was said is if you said 15 years is a very useful, or 15 years is what it would take to get quantum computing where it is, that's probably on the early side. Then he said, this analyst day, if you said 30 years, it's probably on the late side. But if you pick 20 days, it's a whole bunch of us that would believe it. So what he's basically saying in NVIDIA, he's saying NVIDIA is going to play a very significant part in quantum computing. And you guys can all look into quantum computing. It's great, but it's also super freaking scary. And it poses a huge risk for Bitcoin and blockchain. So they're going to have to do a lot of work to blockchain if quantum computing kind of gets a hold and does this. But look at these falls. After this press release of basically essentially saying, hey, we got to be realistic. Quantum computing is more like 20 years away. And the markets didn't like that. And holy crap, right here, we got a computing, if I said that right, I think I did. Plunged 40%. Ion Q shed 32%. D-Wave Quantum dropped more than 38%. Defiance Quantum fell 5%. Quantum Computing announced a stock offering of 100 million, sank 39%. Holy crap, did that whole sector get decimated, including Nvidia. Nvidia has been definitely going down, but the excitement boosted shares into the year end with Regatta and D-Wave rallying 1,449%. So that was last year, but you're basically just seeing them sell off because of this new news that Nvidia came out with. Short article, so you can check it out for yourself. But that's just one. And I think we think that things are moving which they are. At least I want to preface, they are moving really quick. I mean, AI is moving quick. Computing's moving quick, chip development. I mean, we're in that era where computers and tech and all this stuff is just moving at light speed, but it's not moving as fast as some people think. And I've just started wrapping my head around quantum computing a little bit. It's a bit scary. The amount of data that quantum computing will be able to process literally would allow quantum computing to literally roll back blockchain. Like, because if you understand how blockchain works, it would literally have enough computing power to roll it back. And essentially you could beat blockchain. You could basically unsecuritize and the blockchain. And I'm probably saying that wrong. Bob McIntosh would be able to probably speak much greater on that, or any expert in blockchain, or, like Cole Snell from Infinio.ai. You should check that out. They could speak a lot more confidently than I can, but the limited information I have on quantum computing and its effect or fear of what it could do to blockchain, I think they can fix blockchain and make it so that would be more secure. But as of right now, it is completely wide open and could be penetrated. It could literally have lots of stuff happen there. What else is in the news? Well, private sector companies added 122,000 jobs in December. How's everybody feel about that? Well, it's less than expected. It's funny how the news does this, right? Why I report less and less of the news is because of this. Private sector companies added 122,000 jobs in America just in December. Woo! Awesome. Everybody's kind of looking around, see if everybody else is clapping. Hey, yeah, it's good, right? Well, it was less than expected. So again, preface, the economy's slowing down. The media wants to kind of try to keep it propped up. Well, hey, because Biden's still in office and we haven't had Trump. Now, watch when Trump comes in. It's going to be interesting. This is what I can't tell. It seems like a lot of these media companies like Mark Zuckerberg are just kind of bending their ways. And it just shows how weak they are, or how much they can easily be bought, because Mark Zuckerberg kind of went on, and here, let me find that article. I'd be remiss not to show you that article about Mark Zuckerberg. And I know some of you read it, but here, it's right here. I just got to find it. Censorship of the payroll. There we go. Let me just share this, because this is just, I don't know how you all feel about this, but it to me just, the only word that comes to mind when it comes to Zuckerberg is "you little bitch." Like, it's the only thing I can think of. I mean, you all might be able to come up with a better word for it, but right here, Zuckerberg ends Facebook fact checking, admits it became a censorship tool. Motherfucker, it was always a censorship tool. Let's not candy coat this shit. Your freaking fact checking was always censorship. Oh, but Trump's coming in, so hey, you blah, 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 blah. Too much censorship. Let's change that. And we're going to scrap the fact checking and restrictions on free speech as President-elect Donald Trump prepares to return to the White House. In other words, Donald, hey, I know you don't like us. I know we pretty much fucked you over and over and over again. But hey, we're cool. Like, we're ending fact checking just for you. I don't know. How's anyone feel about that? Filters make mistakes and take down a lot of content they shouldn't. What's your thoughts on that? Here's the article. It's, pretty short and sweet. But essentially, Zuckerberg, well, the conclusive evidence is he's just a little bitch and just swings whatever way the wind is blowing. I don't know. Steve, you usually have a comment on this. There we go. Media will go after Trump on the economy big time, as they did the first time he was in. I don't know. Coward, great word, Jet. Let's see. Shauna said my immediate response was wow, but then I realized the underlying reality is you just go with the ruling party. I think that's probably a good way to say it. Commies want censorship. So here's the I don't know. This is like one of those big uncertainties. Will the media literally do what they did during Trump's last administration? Will they literally keep coming down on him? Will they go after him? I don't know. But I think like CNN always will until Elon Musk buys them, that is. But I just don't know if this time around media is going to go after Trump. I almost feel like they're just going to bend and kind of just be buddies with Trump, because I feel like when Trump comes into office this time, and I think they know this, heads are just going to roll. He's going to literally lay the hammer down, because he learned a lot during the first administration, or learned a lot of what mistakes he made, and thinking, hey, this isn't, this is, well, anyway, we all know what happened. And the other thing too, did everybody see, hold on, let me come back over here to the news, that the judge, let me find that article. Let's see, the judge, where's my judge here? Trump's got sentencing coming up here right before Inauguration Day, and he was trying to get that pushed because obviously he's president-elect. But the judge said, nope, we're still moving forward with sentencing. However, that judge also had mentioned that they're probably not going to sentence him. Okay, he's probably not going to get probation, and they're probably going to drop the fines. But the judge said, we're not going to postpone this till after Inauguration Day. So that's an interesting little one. Good old New York judges, got to love that. Let's see. European wind stocks tumble as Trump says he's going to stop new turbine construction. Mortgage rates hit the highest level since July, crushing application demand and mortgages. Just reading top line stuff here. This is an interesting one. European Union won't allow a tax on borders. French minister says after Trump's Greenland comments, I think he was saying something about Greenland and how he's whatever. He says so much stuff. Yeah, here it is. Trump asked Supreme Court to block New York hush money sentencing, denied. Thousands flee Los Angeles. Wildfires burn out of control, destroying homes. That's a pretty sad thing over there. People are losing their homes. I'm sure there's a lot of animals dying to these fires. It's a sad thing. Why Trump's pursuit of Greenland? Because he is going after Greenland. If you haven't read that, or so he says he is, could be cheered on by Russia. Didn't really look at that. This is an interesting one. GOP-controlled North Carolina Supreme Court blocks the certification of Democrat as winner of a close-held race. So if you haven't followed this, so recently there was some interesting things going on, and I just saw this morning. It was blocked because there was a Democrat won one of the votes in a 5-1 vote. All the Republicans on the state Supreme Court ruled to prevent the North Carolina State Board of Elections from certifying the results of the race, where Democrat Justice Allison Riggs holds a 734 lead over Republican Jefferson Griffin. Riggs rescued herself from the Tuesday's order. So a lot of crazy shit going on, right? Just a lot of crazy things, like what they're blocking it. What do we know? What do we not know? I don't know much about that. If any of you do, great. Please bring it to me. Tell me. Let's see. Rental price coordination. More EV stuff. How many of you own an EV car? Anyone? I don't, we've got some super cold temps going on around here. I was just talking to my buddy. He has a Tesla, loves it. And I just asked him, I said, hey, with this recent cold snap we have, because it's been like anywhere between 5 and 20 degrees here in Buffalo with some wind chill. I said, have you noticed less range in your Tesla? And he said, absolutely. He said, yeah, when it gets cold like this, our range drops in half. His Tesla's several years old. So as you know, with batteries, as you charge them, they lose their efficiency a little bit. And he said about half of the range. I didn't say this to him, but I really wanted to. I wanted to say, hey, my bi-turbo V8 typically averages around 12 miles per gallon, maybe 15 on a super good day. But when it gets cold, my range actually goes up, buddy. Like I actually can go further when it's cold because my gas-powered engine loves the cold. It loves the cold air. And I didn't, but, I felt kind of something inside me. Should I tell him that my big V8 goes further in cold weather when his EV, eco-efficient EV with all that lithium in that battery. And yeah, all those charging stations powered by coal in some cases. Anyway, or natural gas. But I didn't bring any of that up. I just sort of let it go. But how many of you just sometimes like feel like just saying something? You know, you're just like, man, I love your Tesla, love your Cybertruck. How's that do in the cold? Hey, when we get those ice storms, do your door handles open? Can you get in the car? Like, I don't know, just all sorts of things you just want to say. But let's come over here to some of the questions coming in as we kind of get to the last few minutes. I don't want to leave any of you hanging here. So let's see. We got over here on Instagram, said Mark has no backbone. Yeah, well said, Zachary. Let's see. Hawkins, Botham Hawkins said Trump should take over the UK. I mean, I guess one country at a time. I mean, let's start with Canada, and then maybe we'll go to the UK after that. So interesting. Let's see. Commies conform. Yeah, conformity. I love that. You know, there's the Earl Nightingale, conform or create. Granted, we like the new pivot, but it is what it is. White House pressure was too strong. He's going to flush the toilet. You know, he said that last time, Dex. He said he was going to drain the swamp, flush the toilet. Hardly did that. He didn't realize how deep the swamp was. But yeah, Trump wants to buy Greenland. Yep, it's a negotiation tool. We'll see if he can pull that one off. It doesn't look like Europe's super keen on that. We can't in Buffalo unless we put it in the garage. Won't charge well in the cold. Steve, you driving an EV? I mean, I can't see you as someone that drives an EV. I've always known you as being a truck dude. My 454 Chevelle loves the cold. Yep, those gas powered engines, man, they do love the cold. I gotta say, you know, they really do. So eat your heart out, EVs. Eat your heart out. But with that being said, let's just come over here. I wanted to see if there's anything else. Trump announces $20 billion foreign investment to build new U.S. data centers. If you don't know this, I mean, the U.S. doesn't really have enough data centers, and Trump's kind of vowed to, you know, put some resources and some money into the data center, not only just data centers, but also refineries. The U.S. can produce more oil, I don't want to say than just about anybody else, maybe close to just anyone else or more than anybody else, but we don't have the refining capacity. So most of the oil that is pumped out of the ground here in the US is shipped abroad, and it's shipped abroad to be refined and then sold back to us at an exorbitantly marked up price. So, you know, I just recently invested in an oil well, primarily a tax play for me, but I've been learning a lot about oil wells and, you know, how speculative are they? Like, what are the things that really make them fail? And I'm learning a lot about, you know, when they pump oil, all the water, and they need to actually have like wells, like holes, or I guess you'd call them wells, to dispose of all the water. But now they're coming up with all sorts of new technology to dispose of the water on site, instead of just, you know, these wells that they need to store the water that comes out of the ground along with the oil. But I think one of the big things that Trump has kind of committed to is not just pumping more oil, but also refining more oil. And in the past decade, the problem with oil in this country has been all the regulations around refineries. So a lot of the refineries, you know, have just either shut down or just, it hasn't been profitable in the States because of the regulations and all the rules. Now, Trump, you know, saying he's going to kind of strike down some of those. And he said he's going to do some of it on the first day in office, which would allow some of these refineries to kind of come back on and refine more. But we need a lot more refining capacity here in the U.S. if we're ever going to be energy independent. Otherwise, we got the crude and we ship the crude outside the U.S. and then that crude is refined and sent back. And the areas that do a lot of our refining are not areas that I feel we should be really, you know, supporting and buying. And that's a big part of this tariff play is, you know, just the deficits, the U.S. trade deficits. I mean, we import so much more than we export, and that's got to change. It's definitely got to change. So with that being said, I mean, we got a lot coming up in 2025. We got a lot of things that are going to happen. You got to kind of just really get ahead of it, and you got to really just look at yourself in the mirror and just say, hey, am I ready for this roller coaster ride? Do I want to stay invested? Do I want to keep my money, invested in the 401k? Do I want to listen to my financial advisor and just stay the course? Or do I want to take these gains off the table, continue your dollar cost averaging back into the riskier assets that I had my holdings? Or, what is your play moving forward? Like, where do you want to go? And how much risk do you want to take? As Brent Kessler once told me, he says, is the juice worth the squeeze? To me, nothing in the markets, not Bitcoin, not AI, is worth the squeeze right now. So I am sitting on the sidelines. I am piling into treasury bonds, just like I've been doing forever. I'm buying more T-bills. I'm doing some strategic investing, like I had mentioned, tax advantaged investing, and we're doing some investing with the private foundation money, but doing it into very short-term real estate type investments that are very nimble, very liquid, and primarily land. Okay, so with that being said, I'm going to wrap up. We are 2 minutes over, but we started 2 minutes late. White House, let's see. Anyone got anything else to say about that? Going to be a land man. Yes. All right. Well, this is a good show. Thanks everybody for joining us. Make sure you join us this afternoon for the wealth webinar. That starts at 1 p.m. Eastern. You basically register by going to chrisnaugle.com. That's Chris, Naugle.com. Scroll down a couple and you'll see wealth webinar. Register. It doesn't cost you anything. We even give you free books. So I've got several books and more coming. I want to make 2 announcements. I've got a children's book, which is almost done. It's awesome. I have a 4.5-year-old. It's just such an unbelievable book. I couldn't be happier with how it came out. Right now it's at the publisher. So they're doing their final edits, final reviews, and we should have that book to print and ready to go soon. And we will be, I would say, within the next 3 weeks, taking pre-orders for the book, and it's called The Companion. It is the cutest darn book. If any of you have ever read Shel Silverstein's The Missing Piece or The Giving Tree, it's kind of along that line of a book, but has a lot of hidden messaging in there about private banking, about being an honest banker and things like that. But you're going to have to read it yourself, because that's not what the book's about, but that's definitely what the hidden underlying messaging is, and just about giving, and never, ever taking advantage of anyone. So with that being said, the new children's book's coming out, and also the book I've been working on for a while for my daughter. It's been very hard labor of love. That manuscript is done. We are doing edits and adding on to that. So I'd say within 6 months, you'll start hearing more and more about that. And we also will be taking pre-orders on that. But with that being said, join us this afternoon. We've got an amazing show for you for Wealth Webinar. We're going to be talking about direct versus non-direct recognition, but we're going to be spinning it and showing you some really cool things as it applies to the infinite banking concept, the best storage of wealth ever created, and why. With that being said, we're going to wrap. Thanks everybody for joining us for this episode of, hold on, got to get rid of that, of What the F Happened. And, I always appreciate you being here, and we'll see you this afternoon.